Hello, I am Heidi Pickett, Chief Business Officer with the TIE, and welcome to our TIE Innovator webinar series, The Race to Onboard the Next 100 Million Users. I'm lucky to be joined today with Johnny from VeChain Foundation, Tim from Mirana Ventures, and Rob from zkVerify. Just as a reminder, the information contained in this webinar is for informational purposes only and not intended as investment advice. So with that, for any new users joining us, I think it would be great just to do a quick roundtable of introductions. Would love to hear a little bit about your background and your protocol and anything you would like to share on that front. So Rob, you want to kick it off?
The CEO of Horizen Labs, or the core builder for zkVerify. Background, I was a military scientist actually in my early days, got my PhD in finance, economics, and you can see by the American flag behind me, pretty patriotic American.
And maybe just a quick sentence or two on zkVerify.
Oh, right, I should do that. Sorry, Matt. The most important thing. So zkVerify is a modular blockchain for proof verification. So basically, we're trying to tackle one of the core infrastructure problems of the industry on the basic cryptography side, where we want massively scalable kind of plug-in infrastructure for the Web3 stack.
Awesome. And we'll definitely get deeper into that as we get further into this webinar. But let me turn it over to Johnny.
Thanks, Heidi. Johnny Garcia. I too also have a military background. So I was in the military service for about 5.5 years or so. I was an engineer. Then subsequently thereafter, I jumped around doing all sorts of things. And what I guess now is the traditional finance, but hopefully one day it'll just be finance, from asset management, quant trading, portfolio management, capital markets. And I've since joined VeChain roughly almost 2 years ago to lead our institutional efforts. So VeChain, we're another layer one blockchain, so fairly agnostic as it relates to the traditional sense, right? We have a traditional ledger, and we've got liquid tokens. But sorry, I just want to make sure that everyone's hearing me just fine here. We've got a pretty storied history. So started out as the enterprise blockchain as a service, have since recently, roughly about 2 years ago, transitioned to focus more on consumer-based applications using all the primitives that crypto and blockchain technology leverages as a way of showcasing how can we deliver this technology to provide utility to its end users. So that's me by way of background in VeChain.
Awesome. Tim?
Hey everyone, my name is Tim Chen. I'm a venture partner at Mirana. We are close contributors and incubator and builders and investors in Mantle, which started out as BitDAO Investment DAO, then built out the L2 network called Mantle, and we are now fully integrated into the Bybit ecosystem. So you could think of it as Bybit chain for all intents and purposes, with a heavy focus on RWAs. My background comes from traditional finance, Wall Street, sell side, buy side, then spent about a decade in the tech side at Uber, a couple global companies out of Asia, as well as at a global investment fund based out in the Middle East. So yeah, happy to be here.
Great. Excellent. Well, that's great background. I think it would be good to set the stage, particularly characterizing the current state of crypto adoption across retail and enterprise. So what do you all see as, the core bottlenecks preventing mass adoption? And are we any closer to solving them today than we were, say, a year to a couple of years ago? And I'll open that up to anyone who would like to kick it off.
I can start.
Yeah.
On mass adoption, I would think of it as like retail and institution. On the retail side, you really have to think about, are we talking, I categorize as dollar-based or non-dollar-based, right? If you're in a country or region where you're not dollar-based assets, then any stablecoin that's dollar-based, USDC, USDT, that already has mass adoption, right? It's just, as crypto, we want more than just stablecoins. So I would argue that already has tremendous product market fit. And then layering on additional use cases like neo-banking services, et cetera, is another value add. Now, if you're in the West, let's say in the US, having stable coins is almost, we take it for granted, right? It's like table stakes. We want more beyond that. So what most Western folks want rewards and speculation, right? And so how do we cater to those folks? They would have to come on chain. And so I think mass adoption, we're already in the early innings, but you have to really bifurcate it. If we talk about what the future looks like for retail down the road, I do think it's, as Johnny mentioned earlier, we want to call it one-word finance. We want to just merge that term, right? What does it look like when someone plays with fiat and plays with crypto at the same time? The closest comp, and again, this is vouching for a project building on Mantle called UR. It's Swiss license backed, and what that means is it allows you to transfer in on and off ramp fiat and stables in the same account. It's a unified account. It's the only one that does it. Everybody else really is just a non-custodial wallet with a debit card. So yeah, that's how I see it from the retail side.
I'll just add that I think from the macro side of things is the biggest hurdle I think recently was kind of lack of regulatory clarity. And still, we don't have full regulatory clarity, right? But I think we all recognize that now we have, at least in the US, an administration that's permissive or permissive enough of crypto or kind of crypto curious, where we are starting to see like specific legislation, specifically around stablecoins initially with the Genius Act. But I think that's just a starting point, and I think that's going to kind of grow out from there. So we're a U.S. crypto builder, and for us, for years, we're always just in this kind of gray zone, not really quite sure how to operate. I think that was always a headwind on the industry. The second thing from the user's perspective is like for us to have our own killer apps in crypto, like going beyond the crypto native things like DeFi and so forth. You really do need to solve some of the basic frictions. Like you don't go on X or Twitter and expect to pay a fee every time you like a tweet. It just doesn't happen that way. And I think that we're gonna have to solve these things easily solvable. So stable coins are a big part of that. Like Tim was saying, just resolving that core friction of you shouldn't have to worry about let alone paying to like a tweet, actually paying in a volatile currency. This you have no idea what it's going to be tomorrow. So stablecoins solve that problem. I think the next thing is a sort of UX thing or kind of a design issue, where developers are doing it. We're abstracting away, and like we do this for zkVerify is we abstract away for developers if you want. So if you're an enterprise, you don't want to deal with cryptocurrency, you use our Relay product, and we just handle the stuff on the back end, and you're literally just paying for a service like you would anything else in the SaaS world. I think we need a lot more of that across the application domain, and we're going to scale it pretty hard.
Yeah, that makes a lot of sense, and definitely want to probably dig a little bit deeper into that in a little bit. Looks like we lost Johnny, but hopefully he joins us soon. But let's, I think we should move on to real world use cases, what's working and why it's working. And Tim, I'll kick it off with you. So,
Heidi,
Mantle.
my bad. I'm sorry.
Oh, you're back. Awesome.
Yeah, I was listening in the entire time. I apologize. I had to change browsers. So I couldn't hear, as I mentioned earlier, I was having some issues.
No worries. Anything you want to add on that front before we move into use cases?
Honestly, just a slight, not much to add other than I hate to be boring because I tend to agree with both of what Tim and Rob said, generally speaking. So there really isn't much to add. I mean, regulatory headwinds historically have certainly been prohibitive for folks who wanted to build and deliver, certainly in the jurisdiction where I live. I'm in the US. And so that's certainly one component. So you saw obviously lots of upticks in experimentation offshore. I think also let's just be quite honest and transparent about here. The proliferation of the use cases could just be summarily summed up into one word, which has been speculation. And so I think beyond that, we just haven't really seen a lot of use cases for it. Now there are things that Rob and Tim both mentioned as it relates to like the US experience, also the trust and security. The moment that I mention wallet or anything that has to do with something that's sensitive as your money, right? Something that's precious to each and every one of us. Most folks who are not in this space run for the hills. Most folks who hear crypto think scams. And that has largely been like the other major hurdle for sort of the next 100 million users, as the title suggests, is that the folks who are earlier adopters tend by their very nature of any technology to be speculative. You've been able to express that view now in the form of leveraging fiat and tokenized digital representations of that with this technology versus dog.com or pets.com and the tech bubble in the early 2000s. And so that once we solve for a lot of those issues, and then also create applications that are actually quite useful for everyday existence, which is what we're doing here at VeChain, I think that you're going to see the growth sort of just happen lock and step thereafter. So that's the only thing that I wanted to add.
No, I'm glad you added that, and definitely wanted to talk further about that too. And I wanted to talk about sort of the user experience in infrastructure design, and is it where it needs to be today? I think we may all agree, but I don't want to speak for Rob and Tim that it probably isn't, particularly for the non-crypto. But like even I kind of struggle, and I feel like I shouldn't after being in this industry for 5 years. So Johnny, just sticking with you, for many everyday users, the jump from Web 2 to Web 3 still feels pretty steep. So as you think about specific design principles, whether it's around wallet UX or data privacy or identity, sort of, how do you think about overcoming those challenges? Is there anything that you're doing at VeChain specifically to help that process so that we can continue this onboarding of the next 100 million users?
Yeah, certainly, Heidi. I would say we look. We're on the shoulders of giants, so I couldn't go. I'd be remiss if I said, things like moving from the use case for Bitcoin in the form of trustless transition or ability to transfer value across chain in a way that is safeguarded from governments or anyone who wishes to extract or to exert a level of authority or power over you was one. And then you graduated to things like programmatic money with Ethereum. And so I'd be remiss to say, looking at what happened in the form of the ETH Foundation and what they've built has been incredibly a useful guideline for us, and certainly just incorporating a lot of those early wins from them in the form of how do we think about how MetaMask has leverage or other wallets have leveraged social logins as an easy way for just folks to just log into your wallet. How do we think about the wallet environment to begin with, and also allow for folks to not have to discern between like what does custodial versus non-custodial environment mean. The privacy component that I know Rob's going to speak at great length about as well. How do we sort of safeguard across these things as more and more users come into the space, with all the things that we're looking to incorporate to our existing environment. So there's not a lot of new things that we're doing there outside of borrowing from some of the things that have already started to show very early wins. And then more importantly for us is like, how do we scale our existing enterprise relationships? How do we scale brands that we've come to cultivate really meaningful economic and commercial relationships with in the form of driving brand engagement and intimacy with end users with a very unique and bespoke, custom stylized experience, in-app experience. And that's where we've been focusing a lot of our attention. So I'll pause there, and I'm happy to elaborate on what those look like above and beyond sort of just the onboarding experience, because everything's downstream of that. If you can't get the folks to own the wallet, then it doesn't really matter what you're doing in the app. So extrapolating a lot of the things like mnemonic keys and all that jazz with social login, use your X account, use your Google Gmail account to log in. That's been one of the sort of early things that we've been trying to incorporate just to ease the onboarding process.
Yeah. I don't know if Rob or Tim, you have anything to add or build on that.
I've got maybe a little bit of an anecdote, and then I do think sometimes we overthink things. We do think in terms of like product developers, which we always should, and we should never stop doing that and always get better. But on the core fundamental thing here, guys, is we're creating superior financial products. And I do think the finance at the end of the day carries the day. And I'll give you an example is I have physical gold that I sit on, that I've been sitting on for years, and I have tokenized gold. With a tokenized gold, I can pair that with wrapped BTC in a liquidity pool, and I can earn over 50% yields on that, right? So it's like, and that's just one thing with it. So, and I'm not just touting a yield on a particular liquidity pool, but it's just the idea that you can actually transform capital and actually kind of overcome just like frictions, or actually do things with capital that you just couldn't do otherwise without it being tokenized and then sitting on top of this composable world we built in Web3. Now, here's the plug for us is I think at the end of the day, you need privacy around this stuff. So Johnny said I would talk about privacy and like privacy. Now I think because we're getting this regulatory clarity or instead of headwind, a bit of a backdraft or tailwind, whatever the term is. It's good for us, is what I'm saying. And I think people like institutions are now coming on chain, and they're realizing we have by far, hands down, superior financial products. Because like literally, even if you just took, a money market a fund or an ETF or something, you tokenize it. Now you can do things with that. You can park that into a lending pool. You can use it as collateral. You can, you can loop it. You can do a variety of different strategies. So just hands down, superior financial products. That itself will drive in capital, massive amounts of capital, and massive amounts of users will follow that. Now, if we're just talking pure user count, we tend to think in terms of retail users, but I do think they'll come. Like they'll come because the opportunities here are just exploding. And then when things start getting on chain, you absolutely need to give people the security and peace of mind that their on-chain lives aren't completely doxed to the rest of the world. And that's kind of where we come in.
I think not necessarily the counter to that, but I feel like we're moving towards a more regulated world where KYC and AML will become the norm. And I say that standing from perspective of seeing how Bybit has become probably the largest exchange with the most amount of licenses under its belt, whether it's Miko or otherwise. And so it's anticipating this world where AML and KYC become norm. So then how do you build on top of that, right? What does that mean for all the products underneath? And to answer the other question, that one piece that Rob's saying, I do think we tend to overcomplicate things. The products are there, the financial craftiness is there, but the challenge is on the distribution side, right? And I think why we voted back into Bybit is because, look, they've already done all the hard work of spending the user acquisition cost to acquire users, right? A lot of these chains that are doing RWA, et cetera, their biggest challenge is they have to not only subsidize with the tokens to acquire the supply, they then have to go find a way to acquire the users. And so I think one of the biggest challenges to onboard that 100 million users is how do you figure out which distribution funnel to tap into?
Mm-hmm. Tim, can I just piggyback on that? Is the first thing that you mentioned about KYC, KYB, I completely agree. So actually, when I say privacy, like my company was an outcrop of one of the early privacy coins in the market, Zen, right? And what we're doing now, I'll just say the Zen's new life is actually launching as a regulatory compliant privacy layer on Base. So it's completely shifted. So it's not anonymous and anyone can do anything. It's actually, let's actually bring in kind of like ZK IDs or credentials so you can actually gate pools. You can get access to apps or different functions and make sure that people actually, through a valid kind of identity registration coupled with a KYC process or KYB process that then you can turn into a piece of cryptography, link that to the ID. And this carries forward to now things that they do on chain. I think this is the future. So I think this is going to be integrated into the fabric of everything Web3. And you'll probably see a bifurcation. You'll see kind of like the unregulated Wild West of Web3, which was kind of like our origins. And you'll probably see a massive explosion in the regulated or kind of like, at least like controlled or gated in the sense that you don't have bad actors or threat actors in there.
Makes sense.
Excellent. I think I'd like to dig a little bit deeper into some real world use cases. And Johnny, back to you. So VeChain is kind of pushed forward with the real world asset tokenization and partnerships in sustainability and consumer engagement. So what lessons have you, can you share about how on-chain systems succeed or where you've seen them fail, perhaps, particularly when, bringing in to traditional markets?
Yeah, I think it's worth acknowledging the millennia of human history for which we existed, which is for the most part, like as long as our basic needs are not being met, everything else doesn't really matter. And so, like, while I'm not trying to be pedantic or like philosophical about this, I'm genuinely just trying to be like when we think about from our perspective, how do we imbue utility into what is an incredible technology that we've all come to appreciate for all the characteristics and things that we've already articulated earlier in the call. You can really surmise that into like two things. How does it make me more productive? So how are you helping me do A, B, C, or X, either more often or more frequent or better? And then the other item is like, how does this make me feel? I mean, I think we've already referred to socials in particular multiple times on this call on the webinar so far. So like take X. There are days where I use X for a number of reasons, for like market updates, for sentiment, for for just random educational purposes. But then there's days where I also walk away from X feeling like I need more than a shower. And so like why am I using that as a point of reference? I think about some of the applications that we have deployed on the consumer, sort of the end user front. And they're things like, we're focused first and foremost on how do we make you feel more productive and better for yourself, for your community, or for the world at large. And so there's a number of applications that I can speak to, but one of the ones I'll showcase really quickly is like Mugshot, where you use a reusable mug when consuming your coffee, and we can use all the primitives within blockchain from governance to allocation of tokens to reward that type of behavior. And maybe that makes you feel better, or maybe it makes you feel adequately compensated for the inconvenience of walking around with a reusable mug versus just buying the disposable one that you buy at Starbucks. On the other side of the house is Starbucks is looking to eliminate its disposable cup footprint by 2030. So like this is one of those things that sort of stand in between and allow for the collaboration to be had between a well-known, trusted brand and clients who love going to Starbucks reserves. So that's one particular application. It's got 2 million or so unique users weekly that revisit that platform. I mean, we've docked roughly some 40 million or so sustainable activities, from sustainable mug usage to EV users. So charge your Tesla and be rewarded in tokens, to picking up dog poop. I know it's a major issue here in Philadelphia. I'm sure it's probably, it's not something that maybe some of our folks on the islands have to deal or
we do. We do.
Okay, that's what I thought.
Yeah, we need it.
So no, but these are the sort of like community-based applications that are actually quite useful and can help with stopgap issues when you have public funding that's not meeting the necessary requirements to satisfy those things. When you see a dismantling of trust across multilateral, multinational corporation and NGO or government treaties like the Paris Climate Agreement that is forcing folks to figure out, okay, how do we address the climate transition, for instance? And so that's where we feel like our technology, and more specifically things that we're building on the consumer, on the end user front, can help bridge that gap. And so I've articulated a couple of applications that do that, but we've got a number of things that focus either on whether it's sustainability specific, and I think we see sustainability as a use case here and now, but we're still a ledger, right? I mean, we do multiple things. We have enterprise relationships that focus on tag and trace, or chain of custody throughout focus on supply chain specific items. Sustainability felt like the next low-hanging fruit, if you will, and unique opportunity for us to sort of showcase the technology and all of its greatness.
Is there anything or one thing that comes to mind in terms of what's been most successful for you in terms of onboarding new users to these applications? Is it partnerships? Is it pure just kind of VeChain, VBetter, awareness and marketing? Or, what kind of do you think is like your number one go-to in terms of getting more users?
So I would say all the above, but most importantly, it's definitely going to be partnerships. Mm-hmm. And what's necessary there is having a partner, a high quality, trusted brand that's also digitally savvy and knows exactly how do we continue to engage our customers, our clients, both prospective and existing, above and beyond a given event. So I'll take UFC for instance. They're sponsored of our BYB, Build Your Body application. And while maybe perhaps you look at that and you say, well, that doesn't feel like it's sustainability. Well, like BYB is you should think of it in itself as it's an AI enabled trainer. So it walks you through how to do push-ups, how to do jumping jacks, certain set of exercises. And if you perform them to a certain standard, then you're rewarded over the course of completing those activities. That's personal fitness and health, right? Those are things that enable you to be a better you. And then beyond that, you're also getting a chance to engage and think about or have UFC top of mind. And so partnerships are certainly with established brands and with commercial enterprise relationships that we have are above and beyond probably the most fruitful way in which you can acquire a set of new users that are not your traditional Web3 native folks. And so that's the area we're going to continue to sort of try to breathe life into. And so UFC is one, and we'll look to continue to look at, sports brands and things of that nature, who also have their own applications, who can build on top of Better or VeChain to help, drive continued engagement.
Nice. Tim, over to you. And, the concept of modular scaling with Mantle and treasury-backed innovation is core to Mantle's growth plan. How do you balance infrastructure innovation with user-facing simplicity as the ecosystem matures?
Yeah, it's an interesting one. Look, frankly, we are an L2, and so we leverage all the resources available to us as an L2, and we are constrained by the ones that we are not. And at the end of the day, a lot of the story was around how do we outcompete others on the strength of our technology. But I think that narrative is now out the window because we're fully integrated into Bybit, and the story is more how do we shoot downwards right now that we have the distribution capability. And so with our new found focus on just RWAs, right? Anything from funds, stables to balance sheet of pharma, IP, what have you, right? Anything to put on chain. When I went out there and spoke with a lot of these asset issuers, their biggest challenge is how do I get distribution, right? And so for us as well, as an L2, it's good enough from a tech perspective to, from one side, actively host the RWAs, on the other side, just be a ledger, a record. And that is good enough, right? Then the question is, when you compare to other options in the space, nobody has solved the distribution side, and we kind of have this unfair advantage. And so when you ask, how do we think about building an ecosystem? Now it's more, how do we leverage this? Because if you think about it, our closest comps are Binance and Coinbase, right? Binance has BSC, but it's its own kind of chain. It's more of a walled garden. They're doing their own things. Coinbase has Base, but Base doesn't have a token. And I think they're gated from having a token for a very long time, right? One, in part, just it might cannibalize the value of the stock. And so they miss out on the ability to use it as some kind of additional vector of incentive to bring products to Coinbase. Whereas for us, the opposite is true, right? Mantle is already live, tokens fully distributed. There's no inflation schedule. There are no VCs waiting to dump on you. And so that creates an interesting mechanic where we can use Mantle to incentivize RWA projects to not only come on chain, but also, hey, look, we already have this built-in distribution channel with 70 million users. So that's how we're thinking about it now, right? How do we leverage that to go full court press on RWAs?
Interesting. And then, Rob, you mentioned a little bit earlier, but maybe we can go a little bit deeper just in terms of how you abstract zk verification for builders. Can better infrastructure alone drive more user-friendly apps, or is UX ultimately a product-level challenge?
Yeah, I mean, we've been in zk since zk was a thing in crypto, and it's been really clunky over the years. Everything from just we're not sure which proof systems to use, they're constantly evolving, to generating a proof, it could be cumbersome, to the fact that there's only a few precompiles on ETH-L1 is an example that helps you verify proofs. There's a variety of challenges out there, and then ultimately it comes down to cost and then skill. And whenever something is complex, there's just this big surface area for kind of issues to happen, like hacks to happen, bugs to happen. Famously, Zcash had a big inflation bug that allowed for, in theory, infinite amount of Zcash to be minted. This was many years ago. It was fixed subsequently without any exploit on it. But these things are always a challenge in zk. So it's really held the industry back. So projects like zkVerify, but also there's the whole complementary proof generation infrastructure that's getting out there. It's just all designed to make things really simple and just way easier and more efficient for users. It's kind of on the one hand, building a website used to be a hard thing back in the day. Now it's just completely modular. You just build a website, you pull in 30 different services to the website. That's how we view where Web3 is going. It's just you're going to be kind of deploying your piece of Web3 infrastructure and pulling in a dozen or more services across the stack. And zk is a really important technology that has a lot of things that are really necessary, especially in the privacy domain, which I think is going to absolutely explode. Scalability and, importantly, verifiability of computation, which is really important for AI. I think these three areas are going to drive a massive demand for zk. And you're going to need these chunks of infrastructure that just make use cases scale or be possible that just weren't possible before, either due to cost or literally due to scale. And like, not to go too far or too deep on this, but if Ethereum did nothing but verify ZK proofs, it could verify like 5 per block or something like that. It's just, you're not going to hit a state where you're going to get, I don't know, billions or tens of billions or trillions of proofs, as if like every hardware device or IoT device or every bit of DeFi ends up being private one day. I just can't handle that scale. So I think the next wave of growth for this segment of the market will definitely be in specialization, whether it's the proof gen networks or things like we're doing at zkVerify.
And can you just touch upon verification costs? Because I know that you're aiming to make ZK proofs cheaper and more accessible across chains. Can you talk to us about your approach on that front?
Yeah, of course. So we specialize. We've dedicated infrastructure that does nothing but verify ZK proofs. So we're just hands down the kind of cheapest place to do it, and also most scalable way to do it. But to give you a little bit of a hint or a flavor for it, in verifying a ZK proof, depending what piece of infrastructure you're on, and of course now in the world of like L2s or L3s or Solanas, costs really do vary widely. But you could be looking at dollars to tens of dollars to hundreds of dollars per ZK proof, especially across more esoteric types of cryptography that are emerging. It's just really inhibitive. So I'll just give you an example of one of our customers, which I think paints the picture, called Singularity. And they're a private, like a dark pool, so basically private DeFi. They initially developed using Noir. It was a programming language from Aztec originally, and they use an ultra Plonk proof system. Now it's ultra Honk, but verifying an ultra Plonk proof on Ethereum cost them somewhere between $100 and $200 per proof verification, which is ridiculous. And like, sure, can work if you're trading millions of dollars, right? And like, you're just dealing with $100 proof, no big deal. But it definitely truncates a big part of the demand curve for their application, right? If you're dealing in amounts where all of a sudden $200 to verify a proof is binding or kind of matters to your use case. So that's just one example where just offload that, like offload that piece of computation to us. We handle it like at scale, and like we get proofs down to, I think right now on our network, it's like 0.027 Zen or VFY, for instance, per proof. VFY is trading at like 7 cents, right? So you can do the math on that. It's fractions of a dollar per proof instead of tens of dollars, if not hundreds of dollars.
Interesting. And as we think about onboarding retail and the next 100 million users, I think trust and building user trust is super important. How do you think about this, and how are you entrusting this? Whether it's through auditability, Johnny, I know you're relying on partnerships in terms of like bringing users on, so that's probably a piece of it as well, or compliance readiness. As you think about this, what are you doing to build trust with your community, and then the community that hopefully will come into play? And I open this to everyone.
I'll be very quick. Yeah, I think from our perspective, again, because it's a boring answer again, which is we've been operating for 10 years, mainnet for 8 years, and one of the things that we have not sacrificed above and beyond integrity has also been trying to be as compliant as possible in the jurisdictions where we operate. And so I know Tim alluded to this earlier, but a future that is more regulated, more clear, is one that we certainly look forward to and welcome with open arms, and it's something that's been consistent with what we've been doing since day one. So whether that means we're on qualified custody platforms, where we've made sure that our tokens are registered under the necessary rules of the road, right? So whether that's Mika, all the tokens that are native to VeChain, VET, B3TR, BTHO, the fee token, they're all registered under MICA. That's my boring response, which is the way that there could be a bit of a moral hazard there, but I think most important in the form of insurance, things of that nature. But most importantly, we continue to try to be as compliant as we possibly can in the jurisdictions where it's applicable, and we also just have good faith that we're doing things that are ultimately make people feel good and are good for the planet. And I hate to sound again like a little, this is not virtue signaling, but maybe perhaps we're extending a little bit of goodwill in that regard.
So 10 years, and I know you've only been there too, but and I saw Sunny did publish something, your founder published something around the 10-year anniversary in September. So, can you say, like, is it easier to gain the trust today than it was 10 years ago? I assume the obvious answer is yes, but like, how has that evolved, and like, are we there today?
I'm not sure it is, Heidi. I mean, just go back 2 weeks, like October 11th, that was, in certain regions, it's going to be incredibly more like that's going to be an event that sets people, if they were contemplating doing it in Q4 this year, that could be something that waits for that postpones folks adoption until another year, 2 year, 3 years. And these are the kind of setbacks that, we unfortunately deal with as a new age sort of rambunctious and rebellious community of folks in industry, by which, by our very nature, we kind of is a part of our DNA. And so, like, I think being a little sort of countercultural by its nature automatically makes it like a little difficult for more mainstream adoption. And I look at things like the amount of texts that I had from folks unrelated to crypto, from family members, like wondering what in the world happened 2 weeks ago. I think it's both should be met with some optimism, because these are folks that weren't engaged at all. But also at the same time, like, should be met with a certain degree of frustration and certainly, I was a bit upset in so much as that has now delayed a number of folks in terms of who were contemplating at all experimenting with the V World wallet, and who are now just like, what, maybe I'll wait a little bit longer. So I think it's it's still, the jury's still out in my view, in terms of whether or not we're in an environment where the ability to generate trust is made easier. I think it's certainly, just again, because money's front of mind with crypto, it's certainly easy. It's much more easy to lose that trust. Gaining it back is always made much more difficult. So I'll pause. I don't know if anyone else has a comment or reaction or response to that, but that's my view. That's not the VeChain official view. That's just my personal view.
I think we can be preventative by being as transparent as possible and open dialogue for conversation. And then on the flip side, how do you react to certain crises, right? So, for example, Mantle is still structured as a DAO, and every year we publish what is our budget for the year, and we break that out. And then at the end of the year, we show, okay, how do we stack up against it? Did we make money? Did we lose money? What worked? What didn't? And we're I believe the only L1 or L2 that does this, right? And I think, not to ding some older like Dino coins, like all those ones out there who spend frivolous amounts of money in 21 on random marketing campaigns, right? I think it builds trust to say, where's actually the capital going if you are a token holder? And on the flip side, when crises hit, how do you engage your community? How do you respond in an orderly and transparent fashion to instill trust into the ecosystem? I think Bybit has done very well on that earlier this year. And so, we just look forward on building on those two foundations going forward.
I'll just add a piece, because we probably have a bunch of investors listening in here, and like I was getting investors asking me like, hey, have you done this or that audit on your code base? Audits are almost meaningless, guys. They're table stakes. We all have to do them, obviously, right? and you should take them seriously up to the point that matters. I think the Lindy effect, I think, is what Johnny was talking about. Kind of, if you've been around for a while, you could trust that project probably a bit more. The transparency, honesty, openness, like the organization of human beings behind that project really matters, like Tim was talking about. And there's a bunch of other stuff as well that you can kind of layer in there, but there's probably nothing better than just getting out into production and like battle testing things, or having like open, for the developers out there, just make sure you have like an open bug bounty program early and deep and well-funded, right? Things like that, I think, really matter. To us, it's really just been sort of like trust and professionalism element. We like to think of ourselves, not the Delta Force of the industry, but the quiet professionals, right? The quiet professionals that are out there just every day. I knew Johnny would like that one. He was probably Delta, not telling us. But you're just out there always every day doing the right thing, right? And just showing up and having high standards, professionalism, and like, is your organization like run by or contributed by people that are actually there in the public sphere, or is it a bunch of anonymous developers? Clearly, there's varying risk profiles. Like none of the projects we're talking about here are fit in that category. But I think all of these things come together in like a nice package when it comes to trust, because it really sucks to see these days like Crypto Black Friday, where all of a sudden people just lose trust and everything. But I will predict this: we'll get over it. We'll get over it fast. Not because we all just want to get out there and get back to making money, but because we'll evolve and iterate really fast. And as an industry, we learn faster than any other industry out there.
I will thumbs up to that for sure. Let's look ahead a little bit. So if we were to fast forward to the end of, let's say, 2026, what key milestones would signal that we're truly on track to onboarding the next 100 million users? And, I think we are on track, at least I think, Tim, you think we're on track in certain jurisdictions, but just continuing this more broadly, what needs to take place? What would you like to see? What are your predictions?
Can I just offer a quick one? Is I think part of it's going to be mechanical, like it's just going to happen. And I'll offer one of our customers called OpenDID. These guys are actually working with the digital identities for like China, Hong Kong, Singapore, and I think Vietnam soon, and others like very quickly. They're all going to be verifying these digital identities on like Web3 platforms, like zkVerify in this case. But those credentials will be going across Web3. They'll be there. They'll be available to use. And now clearly, like only a small fraction of people will use them. But just the main point is this is like core pieces of infrastructure, like digital identities and other types of credentials are coming on chain. They will at least have chain intersecting kind of identifiers that will be there, and that's gonna be huge. Like we're just talking mechanically, you're gonna have millions and tens of millions and more of users just coming on chain one way or another.
Tim, you want to take it next? I'll take it next as well. Yeah, I like the way that you described it, Rob, as mechanical. I would argue that's probably the main sort of catalyst that I also anticipate, or the way that I would structure or characterize the main catalyst. And it's going to be things like regulatory support in the form of digital passports in the EU, for instance. As like who's going to be the winner who sort of takes all. Who's provisioning sort of blockchain as a service for satisfying regulatory requirements. I think the combination of other emerging technologies, and I don't want to sort of beat a dead horse here, but how we're incorporating AI into the mix for the purposes of satisfying, particularly with what we do, right? Very small, fractional, small economic value transactions. In a way that is meaningful to a bot to ingest, but not meaningful for me to transfer 10 cents over to, my spouse or my friend. So those are the things that I think when we see an application that is materially, ingesting actions on chain or information on chain in the form of, mugshots or donkey poop bags, and compensating you that for that data and for that information. I think that's the combination of those two are going to be really, really interesting. The application that really nails that, and then other just mechanistically environments like a digital passport or so in the EU.
I think again, the two worlds merge, right? How do you define a user being onboarded? Like if Robinhood all of a sudden bakes an internal private chain and then puts all the settlements there and they onboard however many millions of users they have, does that count, right? Do we get there all of a sudden? Or do we kind of based on some kind of new novel application we haven't seen before that all of a sudden garners 100 million users? So I think either way, directionally, we are moving towards that route, right? Even if we see the NASDAQ tokenize and offer blockchain infrastructure for some of their trading infrastructure, does that then count because you have a Fidelity account you're trading? Are you then a user of that? I I think we're already so in short, I think we're already moving towards direction, and the key is more. A lot of it will be. I always said crypto acts more like a lubricant. It smooths a lot of inefficiencies behind the scenes as opposed to on the front side. And if you think of it that way, I think we are closer rather than further away.
And you all have quite a few years experience in this industry and building. And so I would love to get, what's your advice that you give to builders or institutions looking to support this next wave of adoption, whether it's product design to partnerships to public education, wherever it may be. Would love to hear your thoughts on that front. Because definitely it's going to take more than just the four of us on this call, I think.
I mean, I'll offer up just learning from the mistakes we've made right, at my company is we've been around for a while, and we were building when the stack was much less mature, and the ideas back then were just kind of replicate everything, right? This was like literally back in the days. Remember when you would fork a GitHub of a project, launch a new one by changing some parameters and kind of get going. No longer makes sense. Now we really do have by far superior tooling that we had back then. So if you're a developer or an entrepreneur, literally just focus on your core value prop. That's it, right? Don't waste time on all of the other parts of the stack that have nothing to do with your value prop. We've done that to our detriment over the years, focusing on piece of infra or whatever that really just made no sense. And really define what tangible kind of marginal value you're adding to the industry. You want to validate that to the extent you can, being PMF, right? But then focus on that and only that. And if you need, if you get tempted to focus on something else, crush that temptation. Don't do it.
Very good advice.
I think adding on top of that, my takeaway from that is just be focused, right? And it's one of those things where if you're chasing a narrative, it means you're not first, you're behind, right? Although there's something to be said, when you look at a lot of the Chinese builders, they're amazing at just fast follow and optimize better than the first guy. So if that's in your core competency, then do that. But otherwise, if you're starting not from scratch, but if you want to find a big problem to solve, I would laser focus on where is there unmet demand? And that's a specific question because it isn't where is there a problem to solve, because there are a lot of problems, but where is there unmet demand and friction that there's a lot of capital or users behind that wall that would use your product if you're able to service that one specific demand. So that's how I would go approach it.
Oh goodness. I guess my one little tidbit of advice, and this is also because I'm not incredibly technical as my friends here on the car, but the area that I think is probably so severely under invested in and under both in the form of, I guess, maybe less in the form of physical capital, but certainly in the form of human capital, financial capital, but certainly in the form of human capital is the application, the application layer. So I just continue to say, those who are hell bent on figuring out how in the world, the infrastructure is going to continue to evolve. As Rob alluded to, it's like to think about the sort of Band-Aids and bubble gum and sticks that folks were sort of hemming and hawing and putting together to build a lot of this some 10 years ago. Where we are today, it's as if yesterday was almost in the Cretaceous period. We're not there anymore, and so I fundamentally think that a lot of the value is going to continue to accrue to the application layer, and that there was an area of focus where if you're a builder, we certainly are always actively looking for ways in which we can support either bootstrapping or looking for folks who want to be founders for applications that exist, and maybe perhaps you don't have the right teams who are managing those applications in our platform. Those are the areas that I would certainly encourage folks to continue to look, assuming that you want to come and build on VeChain specifically.
And as we close this out, for each of you, what do you want our viewers, institutions, communities, what do you want us to take away in terms of what should we be paying attention to from each of your respective protocols in terms of upcoming developments or key milestones or developments?
I would say think of Mantle as Bybit chain. And why this is important is because, BSC grew up with Binance in late 2010s. And during that time, it was built and architected around what was possible then, right? Lighter regulations, more on-chain activities. Now, with more regulations, but also a wider funnel of TradFi products RBA coming in, Mantle is very well poised to capture that TAM with the backing of a centralized chain behind it. So that is the direction we're going, and I think that makes a very powerful combo.
And if people want to learn more or connect with you, what's the best way?
Just add me on Twitter. That's TX0ZZ.
Perfect. Rob?
Yeah, sure. I mean, think about with zkVerify, you can think about us as doing for proof verification what cloud did for compute kind of thing. And think about those things like lowering cost, importantly, unlocking scale, being able to do things that just wouldn't be possible without us. So you can have an entire different kind of category of applications. Then the big thing is, do proofs matter, right? That's the big thing. Right? So of course, like we have this infrastructure that can really scale out this piece of cryptography. The way to think about that is if you think that privacy is going to matter on chain, if you think that scaling is going to matter on chain, or verifiability, and again, for not just things like AI, where people think about verifying computation for AI within a black box or whatever, but even for tasks that humans do, right? We have some customers that are verifying, claims that human beings make, whether they're in trading competitions or, whatever. All of this involves cryptography. And if this is going to really hit different, elements of scale and be possible from an application perspective, because costs and frictions and all that are gone, zkVerify is going to matter. Now, of course, there's a lot of ifs and everything I said, but I do think that we're in exactly the right category at exactly the right time.
And if people want to learn more or connect with zkVerify, what's the best route? So
zkverify.io is kind of the one-stop shop for everything, especially for developers who can get there and get to our docs and get an API key or whatever. But if you want to follow me, I'm Rob Viglione on X.
Perfect. And last but not least, Johnny.
Yeah, the last sort of the parting words that I would have here is that VeChain has and will continue to be sort of the RWA before RWA became an acronym. So we've been delivering real world applications and against sort of the ethos and value props that originally were incubated in the early days of thinking about crypto and blockchain and decentralized ledger technology, is providing real world utility at a point in time when folks need it and use it and don't even know that they're using it. And so we're going to continue to deliver against that in the form of all the things that we talked about today, abstracting away a lot of the crypto blockchain native specific items that we've all come to learn and enjoy, but is unfortunately, that's the impediment to adoption. And we need to make it look more and more like user applications when you log onto your Meta app, your X account, and so forth and so on. So we're going to continue to deliver that. And so just continue to think of us as real world applications, real world utility. And where you can find us is on vbetter.com. And that's our primary sort of central repository for all things taking place on the VBetter DAO application and platform, or vchain.org. And then on Twitter, you can follow me at Johnny Garcia, and/or VeChain, the official tag for Twitter X.
Amazing. Rob, Johnny, Tim, thank you so much. Thank you everyone for tuning in to the TIE Innovator webinar series, the race to onboard the next 100 million users. I hope you will join us again next time.
Thanks, Heidi.
Thanks, Heidi.
Thank you.
Ooh.